This is probably the best EMA trading strategy, so if you guys are interested to learn it, make sure to stick till the end of the video, okay? You guys know that I posted different strategy videos. Some of them used EMAs, some of them didn't, some of them used certain indicators, and this is one of those type of videos. Well, I will share with you a very cool strategy. This is a very simple strategy that everyone can understand and everyone can use. Why? Because it has a set of rules, very simple rules that we have to follow, and that's basically it. Okay, the rules are very strict, and it's only about repetition afterwards. Okay, so for this video's example, I'm going to use the 15-minute on AUD dollar, on Aussie dollar, US dollar. You can also use this strategy on higher time frames. You can try it on the lower ones as well. I'm gonna use the 15-minute because I think it's a sweet spot. It's a day trading time frame. You can get trades every single day on the M15 without a problem. But if you have less time to trade, you can consider trying this out on the 4-hour, 1-hour, even daily, but you'll get less trades, of course. But if you want to be a scalper, then go ahead, try it on the 5-minute and 1-minute, but make sure to backtest it before trying it on a live account. Okay, so first things first, we have to add 3 moving averages, exponential moving averages. So we go here, we click EMA, and we click moving average exponential 3 times in a row. We click 3 times in a row, then we edit the first one, which is the pink one, to 200. The length is 200. The second one, which is the orange one, we'll put the length at 50. And the third one will put the length at 20. It's gonna be baby blue. Okay, these are the 3 EMAs that we need for this strategy. Now for the rules are very simple. If we are in a downtrend like we are here, we must see the 50 and the 20 EMA below the 200 to look for shorts, and we have to see the 20 below the 50 as well, like we see it here. This is pretty much a trend strategy. Like when price is trending either to the up or downside, that's when we can catch setups with this strategy. This strategy will keep you away from consolidations, from ranges, when the market will just move up and down without having clear structure and a clear direction. Okay, so this strategy will only let you trade during trends, when the market is trending up or down. In this situation, we are trending down. Now for the entry rules, how do we enter the trade? Well, it's very simple. I'm going to show you exactly how. I'm just going to use a chart example with the bar replay right here. So once the both EMAs are below the 200 and the 20 EMA is below the 50, that's when we can look for sell setups. Okay, so after that we will enter a sell exactly when the candle will touch the 20 EMA. So as we can see, it touched. The 20 EMA was touched. Now, what do we aim for? Well, the take profit is always the previous low, or if it's a buy, the previous high, and the stop loss will be 1 to 2. Okay, this is going to be a 1 to 2 risk to reward rate strategy. So you'll have to adjust your stop loss to have a 1 to 2 risk to reward ratio. Okay, those are the rules. After that, you just play out the trade. This one would have been a stop loss. I mean, it barely hit the stop loss, and then you would have went into the take profit. But we are going to use also for the people that do not have time to trade Forex every single day, or still struggle being profitable while trading Forex, but still want to get setups like this, I highly recommend you check out my free signal group on Telegram. The link is down below. This setup was literally sent today. It was a buy limit pending order. All we do is send pending orders, because like this, every single one of you will be able to make profits from the signals. And this one was sent in the VIP. Of course, if you want to upgrade to the VIP, where we do VIP live weekly coaching sessions every single week, you can do that from the free signal group. Okay, enjoy and thank me later. 1 to 2, and if we have a 50 to 60% win rate, we are very good. Okay, a 50% win rate with a 1 to 2 risk to reward ratio strategy is very good. Okay, so now let's get some examples, because literally we do have some examples that just played out. Okay, so let's just use the bar replay. Okay, this is literally recent price action. Okay, I'm not cherry picking entries. I'm trying to be as real as possible because I'm just gonna use recent example for this strategy, okay? To see exactly if we lose with it or if we make profit. So now we have all the parameters met. We only wait for the touch. We have the touch right here. We place our take profit at this swing low, which is right here, and our stop loss at 1 to 2 in order to achieve a 1 to 2 risk to reward. Okay, so now that we enter the trade, let's see how this plays out. And nice, this would have been a take profit. Okay, this would have been a win. Now let's just play the market, see when we get the next touch. See, the market is trending down. Oh, we do have the next touch right here. Let's see if we manage to get another win. So we will place the trade right here. And also a very important rule, after we enter the trade, look, as we entered here, we then came down and then we touched it again. We won't enter twice. Once you enter the trade, in order for you to wait for a second setup, this setup has to end first. Okay, so we don't trade two setups at one time. We just have to wait for the setup to finish and then we can look for new setups. Okay, that's a very important rule as well. So now this is the take profit, that's the stop loss. Let's see how this plays out. Oh, nice, take profit hit again. And since we hit take profit right here, we now can look for the next setup. Okay, so the next setup just hit right here. So we would have entered a sell right here. Let's see, this might be a stop loss. The take profit will be this low right here. And the stop loss will be at 1 to 2, which is pretty close to the current price. Let's see how this plays out. Oh, looks like this is also a take profit. Very, very nice. So we have 3 in a row, which is very good. We made 6R. That means if you would have risked 1%, you would have made 6%, and so on. R is basically what percentage you risk per trade. So now we would have entered right here on the touch. The take profit is going to be right here. And the stop loss is going to be at 1 to 2 risk to reward rate. Okay, let's see how this plays out. And another take profit. After the take profit was hit, we can see that we literally got another entry. Let's see how this one plays out. So we would have entered right here on the touch. Take profit would have been right here on the low. And stop loss will be right here, okay, at 1 to 2. This looks like a take profit. Yeah, take profit hit. And then the market went again to the upside, and I think this would have been a stop loss. Why? Because we would have entered here on the touch, take profit would have been here, and the stop loss would have been right right here. So yeah, this would have been a clear stop loss. But hey, we won 1, 2, 3, 4, 5 trades in a row, which is very good for a 1 to 2 win rate strategy. And now we just lost 1 trade. So we made like what, 10R? We lost 1R here, which is 9R, and we lost this trade as well, barely. I mean, let's do a recap again on this trade because I'm not really sure if it was a loss or not. So let's play the market again. So let's see when we touch. Okay, we touch right there. So we would have entered right here. The take profit would have been right here, which is the previous low, and the stop loss would have been at 2R, okay, which is exactly right there. Let's see. I mean, nah, this wouldn't be a loss. This would also be a win because literally, I think the first time when I placed the order, I didn't actually place it on the take profit on the swing on the previous low, and in this case it's even actually lower. It has to be the exact previous low, and the stop loss should have been around here. So yeah, I mean, it would have been very close, but still it wouldn't be hit if you count the spreads correctly as well. So that lets us at what? Let's count: 1 win, 2 win, 3 wins, 4 wins, 5 wins, 6 wins, and 1 loss. Okay, so 6 wins and 1 loss in a time span of what? 23rd was Friday and today was Monday. So in 2 days you could have made 6 times 2 is 12R minus 1, 11R, only by trading this strategy on one single pair. Of course, you can trade it on a lot of other pairs as well, but I just used AUD USD for this video's example. And yeah, like I said, it's a very profitable strategy. Don't expect it to be this profitable though. Like, this was a very good market condition for this strategy. To have 6 wins in a row with a 1 to 2 risk to reward strategy is really, really great. And after you see price doing this, you just don't trade. You look for a setup once the previous low, which is this one right here, gets broken. Till we see this low get broken, we just wait. So currently, right now, if I was to trade this strategy, after the stop loss would have stopped me out here, I would have just waited. I would have just waited now, either to create a new low or for price to switch trends, the EMA is going above the 200, and then look for buys. So now that we played out the recent market structure, let me scroll back in time to see if I can find you some buy examples. Look, check this out. 20 EMA is above the 50, but we are below the 200. So we don't look for buys. We only look for buys when both EMAs are above the 200. Look, we have an example right here. So right here, we can see that both EMAs started trading above the 200, 20 is above the 50, so now I am okay to look for buys. Okay, so let's just start looking for buys. Yeah, that was a touch right there. You can either enter with buy or sell stops, or be very careful and enter with market execution. Okay, so the take profit would have been here, and the stop loss would have been right here, and you would have won this trade. Now let's play the market and see if we get another setup. Okay, we would have touched again right there. I think this would have been a loss. So we would have entered the trade right here. Take profit would have been here, and stop loss right about here. Very close. The price came very close to the stop loss. Let's see. And the stop loss would have been hit. So this would have been a loss. Okay, so 1 win and 1 loss. Still would have been 1R in profit after this exchange. Now we can see that after this happened, we wouldn't enter any new setups. Why? Because we have to see this high go. We have to see price breaking this high and then start looking for setups again. Okay, but then if we check, the EMA started to go bearish. Okay, let's see if I can find you one more buy example before ending the video. But as we can see, Aussie dollar was very bearish lately. I mean, this would have been an example, but this was exactly when the CPI news hit, so nobody would have traded this. But we do have some good examples right here. Okay, we do have some good examples right here, so let's quickly run through them before ending the video. So we have the first example, 20 above the 50, both EMAs above the 200, everything is set. This is where we would have entered the trade. The take profit would have been right here, and the stop loss would have been hit. Yeah, the stop loss would have been hit. So this would have been 1 loss. Yeah, the stop loss barely hit. The price barely hit the stop loss, and then it moved up. But for us to enter a new trade, we have to see this high go. Oh, now we have the high being broken. We now can look for a buy setup again. Let's see when we touch it. Oh, yes, we touched it right there. We touched it right here. And previous high is right here. And the stop loss would be right here, around there. Okay, around 1 to 2. Let me zoom in a bit to be more precise. Yeah, around here. So now let's play it. Yep, take profit would have been hit right there. Now we can look for another setup since the high got broken. And this, I think this would have been a stop loss. This would have been another stop loss, I think. Why? Because we would have entered right here. Take profit would have been here. And the stop loss would have been hit. Okay, so 2 losses and 1 win. This would have been a break-even exchange basically. And now I think we will start trending below, or let's see if that high gets broken. Nope, the high didn't got broken, so we wouldn't have looked for a entry yet. And now the 200 crossed over the 50, and I think the price will become bearish. Or not. Let's see if we get one more setup. But I think this is the CPI, when the CPI happened. So yeah, no trades here. So yeah, guys, this is pretty much how we can use this strategy. As I said, it's a pretty profitable strategy. As you guys saw, I literally backtested the recent price action and we got a lot of wins, especially this this part right here when the market trended to the downside. And yeah, please make sure to go and backtest it to get the hang of it and be comfortable while using it. And as I said, feel free to try it on different time frames as well. You don't really have to trade it on the M15. I just use this as an example. And yeah, expect a 50 to 60% win rate. Of course, in this exchange right here, we had a much bigger win rate. But as I said, it won't always be like this, okay? This is a very, very good exchange of trades with this strategy. But sometimes you'll also have losses in a row, so be prepared for that as well. But overall, if you use a proper risk management and you stick to the rules I mentioned, you could make some decent profits with the strategy. But please, please, please go and backtest it before using it, okay? That being said, I really hope you enjoyed this video. If you did, make sure to leave a like. Also, feel free to share the video. And if you have any questions, please drop them down below. I always make sure to reply to every single one of you, okay? That being said, I wish you all a great day and I will see you all in the next video. Goodbye.